So we are witnessing a massive move upwards with Tesla stock, and this is precisely in sync with what I shared was likely to take place about a week and a half ago. Now in this video, we're going to go ahead and break down what are some of the macroeconomic drivers that's pushing Tesla stock upwards so you guys could have a better understanding of what's going on, as well as some other key events, and then also break down what are some other areas within the price action for Tesla that I think everyone should be mindful of. And so if you're someone who's trading Tesla or simply investing in Tesla in your long-term portfolio, consider watching this video in its entirety, as we're going to go ahead and break down a couple of concepts. Now, for those of you guys that are new to the channel, we talk a lot about different companies, but Tesla is one of the companies I talk about very frequently. And back in 2023, I made a lot of videos highlighting how I was very bullish on Tesla. And in 2023, we had Tesla do 100%. And you guys could view those videos, right? I don't delete any videos. I think it's important to have things on record. And it wasn't until December 28th, precisely right over here, where I made a video. I actually made several videos highlighting how Tesla was overvalued from a fundamental perspective and a technical perspective. And I said that it was likely to fall down pretty heavy. And indeed, we ended up seeing that take place. We saw Tesla stock do very poorly for a majority of 2024. And while I was making those videos, I got a lot of hate. I got a lot of unsubscribers. And that's simply because unlike a lot of those other channels that cover Tesla or even make updates with Tesla, I don't try to spin off any news as bullish momentum for Tesla. I try to look objectively of what's taking place in the market, and indeed, I saw the writing on the wall. Tesla was likely to fall down, and a lot of individuals saying, well, Justin, just buy the dip. And buying the dip theoretically is great. However, you don't have unlimited capital, and so you can't buy every single dip because the dip can always get dippier. So if you were buying the dip here, well, it got dippier and dippier and dippier. And that's why I like to wait for confirmation of an uptrend. And so in this year of 2024, I didn't buy more into Tesla, my long-term portfolio, until I made a video on April 23rd after their earnings saying, look, I see there's confirmation of an uptrend. I'm going to go ahead and buy the dip. And so I didn't buy all these dips. I averaged down right over here. And indeed, we saw Tesla stock push upwards. Now, again, this is just a quick reminder that you should not follow what anyone does. You should always trade or buy or sell and invest in whatever you see value in. I'm just simply sharing my thoughts and opinion. But moving on to where we currently were at, or where we're currently at and where we were just a couple of weeks ago, I shared that, look, there's a lot of volume relative to price over here, meaning there's a lot of exchanging between the buyers and sellers. And so I talked about how Tesla was likely to consolidate, and that's what we saw. We saw Tesla consolidate, and I said until we break below the shelf or above the shelf, we're not going to see any major moves. Now, we recently broke above the shelf, and I want to go ahead and talk about what I believe is likely to take place. And again, you guys should only do whatever you see value in. Now, within the Push and Profit private group, someone messaged back 2 days ago, and by the way, I'm blocking what they're saying because of course it's a private group. I'm just hiding. I don't want to, share everything that they said. But here's a snippet of my response to someone asking me a question about Tesla. I said, look, Tesla finally broke out of this range to the upside, making it prime for a swing trade to the upside now that there's little volume relative to price, because now there's this volume, this pocket of volume that's gone. And so if there's buying pressure, well, this helps Tesla stock push upwards. And to kind of get a visual understanding of this real quickly, again, let's just go to a weekly time frame. You see that when Tesla consolidated the most, that's when there was a lot of volume relative to price around over here. It wasn't until this volume pocket where we had buying pressure where Tesla stock had its most bullish momentum ever. And so that's the concept of, volume relative to price. For anyone that's unfamiliar, I share that a lot. But of course, I use technical analysis and confluence with macroeconomic data as well as just the fundamentals. And so let's go ahead and highlight some other things I shared within the Push and Profit private group. So I also shared how, and you guys could feel free to pause the video, but I want to share this part right over here that highlighted how Tesla is establishing a new price range with $193.10 acting as a floor, bearing major economic disruptions. And so despite having some recent bearish flows, we expect the new range to hold throughout August. And we're going to go ahead and talk about August, but I said that this positions Tesla for continued strength. What are some macroeconomic events that's driving the market? Well, and let's go ahead and zoom into this because it's a bit small, but I shared how inflation is one of the key drivers for the markets this week, and how the core personal consumption expenditure report, which is the preferred inflationary gauge for the Federal Reserve, is expected to show continued decline, which aligns with the broader trend of weakening inflation. I've been sharing how inflation is likely to fall down, and I'm saying the trend of inflation, right? I think people get that confused. People say, oh, inflation's not down, everything's more expensive. No, we're not talking about inflation going down. Prices of everything is still up. We're talking about the trend of it weakening. That's two different concepts. Now, the Fed has often reiterated its data dependency stance, yet their actions frequently lag behind available data. And I shared how, despite having extensive research resources, their projections often miss the mark. Now, this is me just kind of going on a rant how the Federal Reserve is one of the only institutions in this country where they hire the most amount of PhDs, workers, in their organization, yet they continuously miss the mark. Just like how in 2021, they shared how inflation was transitory, and boy, were they completely wrong on that. And I shared that they were wrong on inflation on the trends this year as well. And we'll go ahead and talk about that further in this video. But I shared how the disconnect is evident in the continuous, consistent decline in inflation, which should promptly, have the Fed consider rate cuts sooner than later, right? So let's go ahead and talk about a couple of things. So today we had the macroeconomic event, which is a PCE report. That's why we see Tesla stock pushing upwards. If we take a look at SPY, the S&P 500 index ETF, brand new all-time highs. Well, why is this? Well, let's go ahead and talk about it. Today on Barron's, you can see here that the PCE report, again, which I highlighted is the Federal Reserve's preferred inflationary gauge, cools again, right? We see the trend of inflation falling downwards. And so we're also seeing members of the FOMC, the Federal Reserve, cheer this on. Now, how did they not know this before when they employ a large amount of PhD workers? It's absurd to me, but we looked at the higher frequently, updated data. And one of the things I shared within the Push and Profit private group, and hopefully I don't lose anyone, but this is very important to understand the story of inflation and understand the story of where Tesla is heading. So here we're looking at the Mayhem report by Cox Automotive, and we see how used vehicle prices are falling down consistently. And so why does this matter? Well, one of the kind of bright areas within the inflationary reports was insurance premiums for vehicles. And so that was high, but I said those insurance premiums were likely to fall down now that car prices are falling down. So why did this end up taking place? Well, we have to kind of go back to 2020, where we had, of course, the supply chains constrained and we saw demand remain the same, but because the supply chains being blocked, we saw car prices rise upwards. And so what we ended up seeing was inflationary, or basically the insurance premiums start to skyrocket, but it was lagging. But eventually they caught up with the high prices of vehicles. And why is that? Well, it's very simple. If car prices tend to get more expensive because of supply chains, well, if a window breaks or a door breaks, your insurance is going to have to charge you more because now it costs more to repair the car. It's very simple. But now that we started seeing car prices go down, well, insurance premiums start to fall downwards. And that's because, of course, it's not as expensive to go ahead and insure or repair these vehicles. And so that's one of the reasons why I said, look, we're likely to see inflation start to head downwards. And that's exactly what we've been seeing. Insurance premiums, one of the kind of hot parts in inflation or in inflationary reports, is coming down because obviously you don't have to charge as much as an insurance company now that prices of cars are going down. And I know I shared this conversation with my partner, and she was mentioning, well, insurance premiums never go down. And I actually pulled out how much I pay for Progressive, and you could see. Of course, I'm not going to share that with you guys, but I encourage you guys to check out your auto insurance premiums. They're coming down slightly, and that's good news. Why? Because car prices don't cost as much to repair as they did before. Well, okay, that's great news. So we're seeing inflationary trends fall down. We're seeing the S&P 500 push up, breaking new all-time highs, by the way. Which, for example, if you guys are unfamiliar, of course, within the Push and Profit private group, I shared how we were likely to break into new all-time highs in June, and I actually recently shared an update for July, but I'll continue to just keep that private for the private group. But back when we had this dip over here, I've been saying for the entirety of 2024, right, despite me being bearish for Tesla in the beginning, I said the broader markets were going to do very well for 2024, and I said that this area right over here was going to be a dip buying opportunity simply because we had earnings seasons and earnings justified themselves and actually propelled the markets upwards. And I said that, look, we're going to break through 5,200 on the S&P 500 index and likely hit 5,400 by, the middle of June. Well, now we're already in the end of June and we're far above 5,400. We're actually at 5,500. And so absolutely great news. And every single time we had these inflationary reports, like back in February 13th, I said, look, this was a dip buying opportunity, as everyone was getting the inflationary reports wrong. They were looking at the headline numbers, but not looking at the higher frequency data like I was doing within the Push and Profit private group as we parsed through, a couple of things like shelter and insurance premiums. And so here we are with the markets breaking into new all-time highs, and here we are with Tesla, finally having a push upwards. Now, what are some things that I think we should be mindful of, right? So with Tesla, I believe that we're likely to continue to strength as I shared, but it's not going to be a straight upward line. It's not going to be linear, just going straight to the moon. Of course, we all wish that, but we know that over here we're likely to have a bit of resistance, as this was previously support in the past. But I believe that, we're likely to just continue this momentum upwards. Again, we'll want to monitor how we do around the $215 area and see what ends up taking place. But we also have some key events coming soon with Tesla, such as the Robo-Taxi Unveil event on August 8th. I believe Tesla is likely to continue the momentum and then likely on August 8th kind of push downwards. It's likely to be one of those buy the rumor, sell the news type of events. But let's talk about some other events that are key to Tesla, right? So actually, let's highlight this. So Barron's came out recently today saying that Jim Farley of Ford has confessed his love for electric vehicles, and he's still enthusiastic. Now, this is big. This is huge, right? Because we see the legacy automakers still lose a ton of money on EV vehicles. They're trying to break into the EV market, but they keep on reducing their projections because it's simply not easy for them to do, as they're losing a lot of money, yet they still want to go into EVs. Why is that? Well, it's very evident. EVs is the trend. EVs are going to continue going up. It is not just a fad, and especially with government intervention to push the idea of EVs, and this is not just in the United States, it's because globally, well, that's why the legacy automakers are trying to still compete despite it being an uphill losing battle for them. And that's good news for Tesla, because we know that Tesla is currently profitable on their vehicles. And one other reason why I'm still bullish on Tesla in my long-term portfolio is because of the robotics segments as well, right? I also like some of the AI segments, although I'm not too optimistic about FSD, simply because I believe there's a lot of regulatory hurdles, but that's a completely different conversation for a different video. But ultimately, I'm bullish on Tesla in my long-term portfolio. And, I try to specify when I'm talking about my long-term portfolio or swing trading account, because it's very important to make the distinction between whether you're investing or trading, because those are two separate vehicles. And no pun intended with the word vehicles. What I mean is that trading and investing are two complete different objectives and approaches to the market. And I think a lot of individuals mess up when it comes to their participating in the market or participation in the market, simply because they don't know if they're investing or trading. And that's why I keep it separate. So my long-term portfolio, I didn't buy any more shares of Tesla until April 23rd. Recently just bought some more shares in the long-term portfolio. But in the swing trading account, I'm also swing trading Tesla as well. And so it's important that you guys make the distinction of what you're doing with Tesla, right? You don't want to not understand what you're doing with your money. You work hard for your capital. You better understand what you're doing with your capital, right? Now, let's also highlight something else that's pretty interesting. So recently we had Rivian here, and they had some news that they're joining alliances with Volkswagen for this joint venture to create leading vehicle software technology. Now, you could go ahead and read through all this, right? But this is important to understand. Why? Well, Rivian, right, when you actually look at the fundamentals, and I know a lot of people don't like looking at the numbers like the income statements, balance sheets, and cash flows, but it's important to not only just look at the charts and look at the, technical analysis of a company, but also the fundamentals to understand what's going on and also tie that up with the macroeconomic environment. Rivian is losing a ton of cash. They are burning cash, and so they have to join alliances with a legacy automaker like Volkswagen just to compete with Tesla. Right? We have two of the competitors for Tesla joining forces just to compete because they can't do it alone. And that alone is optimistic and bullish for Tesla as well. And that's one of the reasons why I still like Tesla in my long-term portfolio. I just didn't like Tesla right around over here, where, of course, we were in this bad interest rate environment where it was not a good time for people to buy cars, especially when people with good credit scores were having to pay 8% interest just to finance a vehicle. Most people, when they purchase a vehicle, let me tell you the truth, people don't buy cars in cash. Very few people do. They finance it. And so now that we're heading into this macroeconomic environment where the Fed is likely to start finally cutting, even though they're lagging behind the Bank of Canada, who already started cutting, and the Central Bank of Europe, we're likely to see the Fed finally to start cutting interest rates, and that's going to bode well for equities, right? That's why we're seeing the S&P 500 index push upwards. And again, if you want to have access to my daily briefings where I share what's going on with the broader markets and what are some trade ideas that I'm sharing, consider checking out the first link in the description below. I also recently shared this joke on my community post, sharing how somewhere out there in the United States is someone with no clue, absolute clue, that this is their last weekend with all 10 fingers. As we know, July 4th, we always see someone losing a finger. And so I said, be safe, guys. But I also introduced a coupon code to join the Push and Profit private group for just $10 this month. And again, you could cancel anytime. It does expire July 4th. And so if you're interested in getting updates to my macroeconomic, daily briefings and what we talk about, consider checking out the link in the description below. I'm going to share the coupon code. Also consider subscribing and liking this video if you found any value. And also, before you guys go, consider checking out this next video right over here, where I talk about the best days for participation in the market. It's going to help you kind of identify what are some things that you should be mindful of. So I'll see you guys on that next video, and I hope you guys have a good one.